How good were Citigroup's earnings if you take out and strip out that one-off impact from tax reform?
Sure. Citi did beat us by about 3-4 cents, excluding all the one-timers. So it came in very nicely. And I think what the important thing here is the forward look on taxes is positive. They did highlight that they will be reinvesting. And when we look at our earnings outlook over the next couple of days here, as more earnings come through, we expect that about 10 to 30% of that tax benefit will get reinvested in the business. Citi, highlighted that as well.
And the rest will go to shareholders, right? Mainly?
Well, shareholders, it will go to pension funds and other people that own the stock.
People that have a stake in it. So the question is then, is 10 to 30%, is that the correct ratio? Is that enough of an investment to be making in the business? If there is that little extra boon this year, let's say, should they be investing more?
I think that's a great question, and we did take a look through at what the dollar expectations are for tax savings versus what their total expenses are versus marketing budgets. You can't put that large of a tax savings into your business all at once. It just doesn't absorb that big of a tax rate change. However, putting in 10 to 20, 30% is a way of reinvesting in technology, reinvesting in your people, and reinvesting with your clients through pricing changes.
Citi also had a $130 million loss on a derivatives unit. They didn't specify that was because of the South African retailer Steinhoff. What do we know about this?
We don't really have a lot of detail on that, and so it's hard for me to comment.
Nevertheless, there was a little bit of a loss. Is there anything to be concerned about when it comes to the credit cycle and perhaps the banks that have lots of corporate credit on their books?
So as you know, the loss was largely driven by that one-time tax change, a function of having to write down some of the deferred tax assets that no longer are as valuable. So it's not really about credit. Credit, we actually think, is going to improve with this tax rate change. Taxes going down is not only good for banks, it's good for the borrowers as well. Our expectation is that borrower profitability will improve, and our expectation is therefore that the credit really is not going to be a major issue for bank stocks over the next year or so. We're always worried about credit. We're always watching for signs of credit risk, but we don't see it as an important driver of bank stocks over the next 12 months. More importantly, we think is the investment spend in tech. And we do see a significant improvement in consumer expenses associated with technology investments on the consumer banking business over the next several years.